Good morning and hello. Welcome to this month's webcast, Nonprofit Options to the New Overtime Rule. Today's webcast is brought to you by 501c Agencies Trust. 501c Agencies Trust is the nation's oldest and largest unemployment program. If you are a 501c3 with more than 15 full-time employees, it would be to your benefit to contact 501c Agencies Trust to see how much money they can help you save on your unemployment insurance. Many of you on today's webcast are already working with 501c Agencies Trust, and we thank you for your continuing to support our program and participate in it. Before I introduce our panel today, I have a little bit of housekeeping. First of all, you can post any questions you might have during the webcast in the chat box in the bottom left-hand portion of your screen and submit those. Also, if you have any technical difficulties, you can put those in there as well, and we will try to help you as best we can. Most of your technical difficulties can be handled by hitting the refresh button. There's a picture of myself right now in the upper left-hand portion of your screen. Right below it is a little recycle button. That's the refresh button. If you hit that, that kind of restarts everything and usually handles any problems you might have. HRCI credits are available for this webcast. 1 hour. For those of you who attend live, you will get notification of how to apply for that hour credit about 2 hours after the conclusion of the webcast. If you're watching it on demand, you will get that email with the credit participation code on Friday of this week. So this session is available on demand. Please feel free to watch it as many times as you want. Forward it to staff, forward it to friends, forward it to family members, whoever you think might enjoy watching this program. A copy of the slides is also available. If you look underneath the chat question area, there's a button that says Event Resources. If you hit that little drop-down button, there is a copy of these slides in PDF format. There's also a quick fact sheet about these FLSA overtime rules changes that was actually put together by Sonia, who's on our webinar this morning. You can use that for your own information. And then we also have information on there about some of the partners on today's webcast. So without further ado, I'll go ahead and introduce our speakers this morning. To start, we have returning for his second time with us is Jerry Pinero. Jerry is a counsel to Howell & Hutton Law Firm. They have offices in Chicago and Washington, D.C. His primary focus is on representing all manners of nonprofit organizations that have a concentration on employment law, not unemployment law. Sonia is also with us. If you were with us last month, Sonia was with us last month. She's the Associate Director of HR Services with 501c Services. She helps operate their nonprofit HR hotline. And she's a certified human resources professional with over 25 years of experience, and she has an extensive background working with 501c3 nonprofits. Finally, we have Marty Levine. He's a principal at Levine Partners Consulting. Prior to starting that organization, Marty served as CEO of JCC Chicago for a number of years. So I welcome everybody, audience members and panelists, to this morning's presentation. Jerry, you're first. Take it away, sir.
Okay, thanks, Mac. And I'm going to apologize in advance if I seem to be speaking a little quickly because there's a lot to cover and not much time. To begin with, what does this new rule do? In one sense, it's rather limited. It does four things. First of all, it applies only to executive, administrative, professional, and highly compensated employees. In the Fair Labor Standards Act, there are probably about 24 different exemptions from the minimum wage provisions and overtime. This new rule only addresses 4 of them: executive, administrative, professional, highly compensated. All other categories of exempt employees are unaffected. Number 2, it raises the standard salary amount from $455 a week, where it's been, I think, since 2004, to $913 a week, which is roughly something on the order of $47,000 a year. And with respect to highly compensated employees, the salary test goes from $100,000 a year to $134,000 a year. And then number 3, these levels or these floors will be adjusted every 3 years, starting in 2020. And with respect to the duties change, there's no change in that. Basically, what that means is this. To be exempt, you have to satisfy two conditions. I'm oversimplifying just a little bit. One, you have to be paid a minimum salary, regardless of how many hours you work. And number two, your duties have to be of a certain category, basically professional, non-clerical, non-blue collar, etc. And those type of duties, exercise independent judgment, supervise other people, have knowledge that requires advanced training, a prolonged study, etc. Those are laid out in the regulations. That's what the duties refers to, and the Department of Labor decided not to make any change in the duties test. So basically, what you do is you raise the salary level for those two categories from 24,000 to 47,000, from 100,000 to 134,000, and then that's automatically going to be updated every 3 years. That's basically what this new rule does. It takes effect December 1st of 2016. Now, there has been legislation, I'm going to talk about this very briefly because it's a little bit off point. There's been legislation introduced in Congress. I'm aware of at least two bills. One was introduced, I think, by Senator Lamar of Texas, another by Representative Kurt Schrader of the House. The Senate bill would nullify this proposed rule. The House bill would delay implementation, to implement it over a 3-year period rather than a 1-year period. I wouldn't bet anything on that because, first of all, you don't know if the bill is going to pass in the House and the Senate and then be sent to the President. Secondly, if the President vetoes it, a veto has to be overridden by 2/3 of the House and of the Senate. So unless it's attached to some veto-proof bill, I would think the likelihood of this legislation passing is not very great. But in any event, it is out there. But as I said, I wouldn't bet anything on it. In terms of how the new rule applies to nonprofits, the short answer is it applies exactly the same way to nonprofits as to anybody else. Big, small, little, large, for-profit, profit, C6, C3, it applies the exact same way. And that's always been the case. In the comment period, the Department of Labor addressed the issue because many people commented that there should be different rules for nonprofits, a lower salary test, a longer implementation period, et cetera, et cetera. The Department of Labor, rightly or wrongly, considered the pros and cons of the arguments one way or the other and decided that it was not going to carve out any exceptions or exemptions or special rules for nonprofits. So these regulations on exempt employees are going to apply to nonprofits of any stripe exactly the same way that they apply to for-profits or anybody else. That's the short answer to that. Now, in terms of making changes in what you do, it's my opinion. I think you're going to need the advice of other experts and professionals on this because the statute's very complicated and there are a lot of little wrinkles to it. In terms of, I'm not trying to be alarmist or anything, but in terms of some of the issues to consider making changes or some of the dangers you might face, first of all, the overtime rules on what constitutes work time and when you have to pay for it and what's overtime, they're very complicated. They've been around for 60, 70 years, and they've had time to develop, and they're very complicated and hard to understand, even for people that do this for a living, much less for people that don't do it every day. I think there's an elevated risk when you convert exempt employees to non-exempt employees because you have to keep track of the hours. You have to there are additional record keeping requirements. You have to determine what the hourly rate is. So there is some risk in converting an exempt employee to a non-exempt, making sure that the hours are kept track of, and if the person is owed any overtime, he or she is paid the overtime. And it's inevitable that people are going to make mistakes, and then if there's a wage and hour audit, you may find yourself liable for unpaid overtime, liquidated damages, etc. So you have to be careful in terms of making any changes. They should be well considered. I don't know how likely this is or not, but it did occur to me in preparing this presentation. One possible risk, too, is this. If an employee is converted, or I use the phrase demoted, from exempt to non-exempt, the employee might perceive that as a demotion. And if the person's in a protected category, whether you're talking about race, gender, disability, religion, etc., or if he or she is the only one that has been, quote, converted from exempt to non-exempt, there may be the possibility that the person is going to allege that this reclassification was done for a discriminatory reason and therefore violates Title VII. Now, how likely that is to happen, I have no idea, but it just occurred to me as a potential thing to take into consideration in making any changes. So, in terms of before we leave the danger point, this is a very important point. Don't tinker with, adjust, fool around with benefits. Some people have said, for example, well, can I pay people a lower wage but make a higher contribution to the premium for their health care? Or can we adjust benefits? Because compensation has two elements, obviously, wages and the dollar value of benefits. And so the question comes up is, can we, quote-unquote, adjust benefits in order to avoid perhaps having to pay these higher amounts in wages? The short answer to that is no, because as the slide there says, payments for fringe benefits are excluded from the salary level. So if you want to classify somebody as an exempt professional administrative employee, etc., and you have to pay that $913 a week, whether you provide $1,000 a week worth of benefits or $10 a week worth of benefits. The two are separate and independent. Payment for fringe benefits does not count toward meeting the salary level test. So that is I don't think that's going to be a very good way to make any adjustments or accommodations, assuming this rule does go into effect on December 1st. Now, the one thing that the rule does is that it does allow non-discretionary, and I emphasize that word, non-discretionary bonuses and incentives like commissions to satisfy up to 10% of the standard weekly salary test. So in other words, you have to pay, if you want somebody to be exempt on the basis of executive, professional, administrative, you got to pay that person at least $913 a week. 10% of that, $93, can come from commissions or bonuses or incentives, whatever you want to call them. But they have to be non-discriminatory. I guess the simplest way to understand it is you have a rule that says if you sell, for every membership you sell, you get a 10% commission. You're entitled to that. You earn it. That can count. On the other hand, if you have a program where you say, well, we're going to see how much money we made from our convention at the end of the year, we're going to see how much is in there after we've paid expenses, et cetera, and if there's anything left over, I, the executive, I will make a determination as to who gets a bonus and how much of a bonus they get. That's discretionary, so that doesn't count. So it's got to be non-discretionary, and it's only, as I say, it's only up to 10%. So you can have a person, and again, whether this is fair or not is really beyond the scope of this presentation. I'm just telling you what the rule does. So you can have a situation in which a person earns $1,000 a week in commissions that he's entitled to or she's entitled to. Nevertheless, only $93 of that is going to count towards satisfying that $913 weekly salary level test. Now, in terms of solutions, any number of things have been proposed. Commenters, there were thousands of comments to this rule. I forget exactly how many the Department of Labor said, maybe even more than, maybe on the order of 100,000. There were many comments, but in any event, there's all sorts of approaches, and it's going to be very fact specific, and everyone has pros and cons. To go down this very quickly, because I want to give the other speakers their opportunities too. The first obvious answer is if you have somebody who's exempt and you want to keep that person exempt, raise the salary from whatever the person is being paid now to $47,000, or whatever that exact figure is. And in some cases, it may not be that big a stretch. If somebody's already making $40,000 a year, well, $7,000 might be kind of high. But in any event, that's one solution. Just raise your exempt employee salaries. Another solution is to reclassify employees as non-exempt. If you have an employee who's exempt, and that person doesn't work more than 40 hours a week anyway, or only very, very rarely works more than 40 hours a week, it doesn't matter from a dollar point of view whether the person is exempt or non-exempt, because as long as he or she is not working more than 40 hours a week, you're not going to have to pay any overtime anyway. So that's another possible solution. A third one is you can continue to pay a salary even if the employee is entitled to overtime pay, but if the person works more than 40 hours a week, he's entitled to overtime. This is one of the common misperceptions. It's a misperception to think that only exempt employees can be paid on a salary basis. That's not true. You can pay anybody. You can pay anybody and everybody on a salary basis. The only wrinkle is if the person is non-exempt, then if that person works more than 40 hours a week, you have to pay him or her overtime. But if it's a status issue, you can pay everybody on a salary basis. It doesn't have to be hourly. Some other solutions that were proposed: reduce the regular rate of pay for, again, if an exempt exempt employees who do work overtime. Maybe what you do is reduce the regular rate of pay so that the total earnings don't change after the overtime is paid. So instead of paying $30,000 a year, maybe you reduce that to $20,000. And this is where I think you may need some expertise, whether it's from accountants or payroll specialists or attorneys or whatever. Don't try this on your own. You know that we see commercials. Don't try this at home. But these are possible solutions. Convert newly non-exempt employees to hourly pay them an hourly rates, reduce workers' hours, eliminate full-time jobs and create part-time positions. Again, this is going to be case by case, depending on what the exact needs of each organization are. The final one I kind of like: increase the workload. To tell people, okay, look, instead of paying you $30,000, now I got to pay you $47,000, so now you got to work more. That's another possibility too. And there may be others. Well, some of them are listed there. Paid non-exempt employees a salary, reduce or eliminate overtime hours. And with that, I will conclude and turn it over to Sonia.
Thanks, Jerry. Now what are we going to do? Well, start with collecting and analyzing information in regards to your job duties and work hours. It's going to be important to prepare for changes by developing a thorough understanding of the work that your exempt employees are actually performing, reflected both in their job descriptions and in the day-to-day reality. So some of the things that you could do would be to conduct on-site observations, interview folks, do time studies of your exempt employees to determine what they do on a daily basis and how many hours your exempt employees actually work on a weekly basis. This is probably going to be challenging given that most of us don't require our exempt employees to record their work time, and even fewer of us require our exempt employees to code their work time to specific tasks, unless someone is working on a grant and that grant has required people working on it to count and record their time spent on the grant. So data on hours worked, that's going to be used to identify and predict the amount of overtime hours that might be required if exempt employees are reclassified. It can also be used to maximize efficiency and hopefully to eliminate unnecessarily labor hours, because we want to keep the overtime down to a minimum. And having this information is going to help you pull together an analysis of the potential cost of increasing salaries to comply with that new threshold, or converting some or all employees from exempt to non-exempt. And I believe we have a sample letter that is available at the end here that you can modify and use for those positions that you're going to reclassify. Don't use this as a stand-in for a face-to-face meeting. The letter is simply a suggestion for the official documentation for the change. So refining and updating job descriptions. Dust off those often overlooked position roadmap. A job description that's divorced from the reality of the job duties exempt employees are performing, that's not going to provide you with an effective or any kind of complete picture. Take some time to make sure that those job descriptions are a spot-on document that truly reflects the duties and responsibilities that the position require. This is going to be a really great opportunity to perhaps retool and update the job descriptions and perhaps re-engineer the way a job gets done. Now, once you have an effective analysis of your exempt employee's actual duties and the time it takes to complete said duties, you're going to be in a much better position to determine what, if any, changes need to be made to those job duties in order to perhaps transfer duties of an exempt nature to another exempt position if it's determined that that particular job will be reclassified. Defining which positions stay exempt and which ones will transition to non-exempt, I would love to have a definitive answer for you or some easy way to decide who's going to get an increase to the new level and whose position will now be paid on an hourly basis, and I don't. It's all going to depend on the analysis that you're doing and the data that you collect. It's going to depend upon the culture of your organization and bottom line, the bottom line. That is what you can afford to do. With the data you've gathered, you can then begin to calculate the potential costs of increasing all exempt employees to the new salary threshold, and also calculate the potential cost of converting some or all exempt employees, and perhaps recognizing that it makes sense to transition some specific positions or in different programs or departments to non-exempt employees. You may just decide to make everybody in a certain program non-exempt. In calculating various combinations, that's going to give you a better understanding of the effects and costs of any potential changes. You need to also realize that for the positions that you decide to increase to the new salary threshold, there may be a very small margin now between the manager's pay and what their staff is now paid. It's called salary compression. This can create some negative, it's not fair feelings. Be open. Acknowledge that that may be true. Recognize and communicate that this may be the reality for now. Developing a communication plan. Well, remember the saying, it's not what you say, but how you say it. In this case, I want you to think about both. Communicate with them. Have a dialogue. Don't talk at them. We all know that this is a complicated situation. Most of us don't like change, especially if we perceive it to be negative. It's important that your management team have a consistent message as you roll out the changes, and then staff start to ask questions. We need a strong, clear vision moving forward. If you haven't started talking with your managers and supervisors, start now. Figure out how you're going to talk about the upcoming changes, whether increasing salaries to meet that new threshold, classifying positions, or some combination of both. You may want to designate a main point of contact for questions. However, I encourage you to prepare your management staff with information. Get their input. They're probably some of your most creative individuals, and they may help you develop that clear vision. Think about preparing a document that's going to explain the what, the why, how, and when of the changes, and that you can share those with the affected employees. Provide your managers and supervisors opportunities to ask questions that they anticipate their staff are going to ask, and consider role-playing to help them respond in a positive way. Empower your managers with information. Encourage them to be positive in communicating the changes. Their way of handling the situation is going to make or break how well this transition goes. We suggest meetings now to let those employees who may be affected be given a heads up. Reduce the element of surprise. Briefly talk about, recap, and explain the changes in the salary threshold. Let them know that these standards are set by the federal government and not by your organization. This isn't personal. Some may feel it is, like Jerry talked about, but it's the law. Inform them that the salary level was doubled and that you can't or may not be able to increase everyone's salary to be in compliance. Explain that you are all working hard to figure out the best possible answer, whether that's increasing those salaries to comply with that new threshold or having to reclassify some positions. Like with the managers, solicit their input. They know their jobs best and may have some terrific ideas. Think about issues. Anticipate that there are going to be issues. There are going to be some bumps in the road. Some employees' self-esteem may be impacted by the move from a salary or an exempt to an hourly pay structure. They may feel less valued. Realize that this could lead to increased turnover. Try to think about and identify those employees that may leave because of this. Some other things to think about and consider that may occur due to the changes in how certain positions are classified and paid are, like Jerry mentioned earlier, the perception that this is a demotion. Those employees whose positions are reclassified may feel that you trust them less. You must communicate clearly that the change is how they are paid and you're paying them for all hours worked. It's about the way the pay is calculated. Be sure to communicate your appreciation of their continued hard work and dedication on behalf of your clients, the organization, the mission, and your vision. Another thing to think about, will the employer's benefit plan need to be modified? But remember what Jerry's cautions were. Are there any timekeeping practices and systems that need to be changed? And how will changes in compensation of your currently exempt employees affect that internal equities in the compensation of the employees above and below them? We talked about that salary compression. I want you to be prepared, be sensitive, follow up, and be open to the feedback that your employees have as the process rolls out. Keep those lines of communications open. Recognition and engagement is important at all times, but it's going to be crucial in times of change. Training and education for your managers and those that are newly exempt. You may soon have employees who haven't been paid hourly in years or even decades. You may also have managers who have never supervised hourly employees. It's going to be critical to educate everyone on things like, when is overtime earned? Is it earned daily or weekly? Who must take meals and breaks? Are you aware of what your state laws are regarding meals and breaks? States with meal and break laws, they tend to be pretty particular about how long they are and when they should be taken within the day. For example, never in the first or last hour of work. What about time cards and tracking hours worked? Explain the new timekeeping procedures. One of the most difficult adjustments is, for the newly non-exempt is going to be that they are required to track their time down to the minute or a few minutes. They will need to carefully record all time worked. Again, explain that this is a result of federal regulations and it's not a discretionary organizational decision. Employers are bound by the FLSA to keep track of the time non-exempt employees work. And we need to realize that habits, they're hard to change. Newly non-exempt employees may find it hard to adjust their work routines and learn to be more efficient with their time. It's difficult to change our habits that we have had for years, such as working through lunch, checking work emails after work, or even taking work-related calls in the evening. Supervisors need to make it a point to walk around daily, check in on everybody, take a look at the time cards to be sure that non-exempt employees are not working through their meal periods or staying late. Caution here, be careful in how you approach the checking of time cards. You want the check-in on time cards to be a positive thing. That is, in the beginning to make sure that they're recording all hours worked so that they are paid correctly. And if there's overtime earned, they need to be paid that. You don't want this to be big brother, I'm watching you sort of approach. Supervisors must be aware of their employees' work habits in order to avoid unanticipated increases in program or departmental wage increases. Remember Non-exempt employees must be paid for all time worked, whether or not the supervisor specifically authorizes that time. We get this call on the hotline all the time. You've got to pay it. You can discipline, but you've got to pay it. If you have habitual offenders that are logging extra time, and it could be just a habit, supervisors need to speak to them immediately about adjusting their routine and help them with that process. If employees are struggling to meet workload demands, you may need to redistribute or reschedule them in order for them to get their job done. Good, open communication is the key to a positive working environment and to spotting, understanding, and resolving issues as they come up. We must remember to be patient and allow time for all of us to adjust to a new way of working. And now I'm going to turn it over to Marty.
Thank you. I come at the challenge from a somewhat different perspective. The opportunity that we now face is the balance between managing and leading. What we've heard in terms of the complication of the new rules is very much about the role of managing, of ensuring that we meet budgets, that we're in compliance with new rules. But what it's done from my perspective is highlight where the nonprofit sector has not been leading. And this is an opportunity, and I think this discussion of how we communicate with our staff about these changes is an opportunity to really look at what are our values, what do we care about, and how important are the people who work for us in our system of values. What the new rule has done is given us a chance to act on those values. The role of many exempt staff, from my perspective, has been a coping mechanism in which we've taken advantage of an opportunity to count on the dedication of our staff, their commitment to the work that we do, and the opportunity to classify people in a way that they can work more hours without more pay. Is dedication to a job a rationale for our taking advantage? And I use the word abuse because when we consider the kinds of work schedule and the salary levels of many staff, we are in fact asking them to do something that is abusive. So which side, in terms of our values, are we on? If you look at the change, $23,660 a year as a basis for considering the potential for unlimited work is really an embarrassing level of salary. It translates to $10.90 an hour, just barely above the minimum wage in many places and well below the minimum wage that many of the folks we serve are fighting to reach. The question of whether 40 hours or unlimited hours are really the kind of standards we stand for as a nonprofit sector. If these were not our employees, but folks we were serving, I'm not sure that we would have a different answer. And that's the leadership challenge for the moment. Do we fight the increase, or do we fight on behalf of our staff? And there are now opportunities. The fact that there are proposals on the table for changes gives you an opportunity to be weighing in from whatever your value position is with the folks who have made law and moving forward. We have an opportunity with other nationwide government nonprofit organizations to be talking with government at all levels about their adjusting contracts, to recognize that some of our staff who deserve to earn fair salaries need to be paid that, and contracts need to be adjusted. We can also be doing similar kinds of advocacy with private funders, individuals and foundations who can, in fact, adjust contracts we have. That's a key piece of opportunity. It gives all of us, as we work with staff, an opportunity to say, not only are we not just victims of changes in rules made by a federal government that's distant from us, but we really are coming to grips with what we think our staff is worthy of earning, deserves to earn, and how we and they together not just cope with reducing their hours, but really become advocates for getting the resources to pay them fairly. And with that, let me end. I think there probably are questions.
Thank you, Marty. Yes, there are quite a few questions. So before we get, and I want you, everybody on the call, to go ahead and if you had something that came up during anybody's section where you feel that you need something addressed, just go ahead and shoot those in there. We'll try to get to as many as possible. I would shy away from exact specifics. I've seen a couple of questions in there where, you know, we're getting how many employees we have and what kind of issues we have and stuff like that. But I would also invite the speakers to go ahead and hop in the question queue as well. I'm going to go ahead and call out the numbers when we do this so that you can read along. Some of these are a little bit, to be honest, they're a little bit wonky for me, being that I don't deal with this every day like you all do. But before I hopped in there directly, I wanted to ask the panelists as a whole, what do you all foresee is going to be the biggest issue that organizations, specifically nonprofits, are going to have to face when they deal with this? Is it going to be the numbers, specifically, you know, a couple of staff members or a couple dozen staff members where we're going to have to alter salaries and job descriptions? Is it going to be the morale issue? Just go ahead and give me your thoughts on that if you don't mind.
I'm sorry, go ahead.
From my perspective, the coping mechanism to deal with coming in alignment with these rules is going to, I think, be challenging around the organizational culture and why an organization has built a business model around people working excessive hours for what may be relatively low pay. How management and their staff have that conversation may actually be the most telling part of how to cope with this.
Yeah, I think communication is going to be the key. And I think for a lot of us, that can be difficult.
And I would say, from my perspective, I think the two biggest issues are going to be, number one, the proper classification of employees. If you review your classifications, as Sonia was suggesting, and you determine that these individuals are genuinely, legitimately, bona fide, exempt employees, etc., then I think the biggest issue, if they fall short on the salary test, is where are we going to come up with the money? That is going to vary. Now, for some organizations, I don't know if this is feasible or not, but at least a lot of the organizations I work with, they have reserve funds, and these reserve funds can be quite substantial. So maybe on an interim basis, they need to draw down on some of the reserve funds. But from my perspective, I think those are going to be the two most difficult issues. If somebody is bona fide, an exempt employee, and falls short of that salary level test, how do we get that person, him or her, how do we get them up there to the new salary level? Because it's got to be done fairly quickly. We're already into August. You only got a couple of months left, assuming the legislation's not derailed.
Okay. Just also a note for everybody on the call. If you need a copy of the slide deck, click on Event Resources in the bottom left-hand corner, and the slide deck is found there. It's a PDF of it. We also have a fact sheet that Sonia pulled together that has specifics about everything that was talked about in relation to the law. Jerry, real quick, and Sonia and Marty, when people go through and start reviewing this stuff and they find that perhaps they've misclassified somebody, what's the next step on that?
Well, I think you've got a wonderful opportunity here to make it right and therefore transition them to a non-exempt position, to reclassify that position. of course, Jerry did hit on some things to think about. But Jerry, what are your thoughts on that?
Well, that comes up routinely. Basically, what you have to do is, if you determine the person's misclassified, in other words, you've been treating the person as exempt and the person's non-exempt, first thing you need to do is find out, if you can, from records, how many overtime hours did the person work, and then you've got to pay those overtime hours. And then get an agreement, a written agreement between you and the employee that says this compensates me for all my overtime hours that I'm earned. Now, having done that, there's still some risk there, because number one, under the Fair Labor Standards Act, it's either a 2 or 3 year statute of limitations, depending on whether the violation was willful or not. So you have to decide, do we go back 2 years or do we go back 3 years? And then secondly, there's also the issue of liquidated damages. If the person has not been paid overtime, he or she is entitled to the same amount of money in so-called liquidated damages. In a settlement like this, and the third factor is, under the Fair Labor Standards Act, any settlements have to be approved, either by the Secretary of Labor or by a court. And in the type of situation we're talking about, that's basically a settlement between the individual and the organization to make the person whole. But nevertheless, I think that's about short of going to the Department of Labor and saying, I confess, I misclassified an employee and didn't pay overtime. I think that's the most you can do to correct the situation, is what I just described.
And I think you do have a wonderful opportunity here to blame it on the new salary threshold level, if that's possible.
That's right. Blame it on the feds. That's what we do.
That's
right. Okay. Real quick, can somebody explain to me the way the law is set up currently, the rules set up currently, how the increases will be handled in the future? There's a percentage increase over a certain amount of years or a reset. Can you restate that again for me?
Well, I don't remember the percentage, and there may or may not be one, but I do remember seeing that they are anticipating it to be 51,000. That would be the new level in 2020. I don't know, Marty or Jerry, have you heard anything different?
The current law,
no, I haven't.
As it's currently written, my understanding is it's indexed to the geographically to the area that will have the largest increase based on a CPI-related kind of measurement, and it automatically happens every 3 years. And the at least House proposal proposed by 4 Democratic representatives for changing this not only takes 3 years to phase in a higher level, but also removes the 3-year window, and so there would be no automatic indexing under that House rule.
Actually, Marty, if I may, this is Jerry Pinero. I think it's the opposite. If I recall correctly from reading the Department of Labor, the way the increases are calculated is I think it's 40% of the region of the country with the lowest increase in the CPA, which is the South. I'm not picking on the South, but that's just statistically. So that's what the increase is based on. 40% of the increase in the lowest region of the country, which currently is the South. However, that's defined by the Census Bureau.
But we don't have a percentage that I've read in. But I
think there isn't.
Right, and I think that the number that we have seen is 51,000. That's what they're thinking it will be as of 2020.
Okay.
All right. Okay, and I'm going to just hop into the questions now. So if you all are in the questions queue, I'll call out the number so that I don't have to sometimes read the whole question. But there's a couple of questions in the queue about schools. Is there exemptions or different approaches for teachers?
Teachers are exempt. These don't apply to teachers.
Okay.
Right. Correct.
All right. So teachers.
But it doesn't matter. It doesn't matter whether it's state licensed, or if the person's in a teaching capacity, it doesn't matter if it's state licensed or it's a private school or for-profit school or it's secondary or high school or something. Teachers, they remain. These new rules do not apply to teachers.
Right, but they have to be ones that are actually leading the class. It doesn't apply to teacher assistants, right?
Right.
Okay, great. All right, so I'm going to go ahead and look at question number 9. If you have someone who is currently exempt and you wish to keep them at a lower salary, can you simply make them non-exempt so that they get overtime for hours worked over 40? Is there any problem doing that?
Yes. You can't have somebody who's exempt be non-exempt. So they would have to be either exempt if they're properly classified, or they're non-exempt and you pay them hour for hour, and if they earn overtime, if they're not in California or Colorado, Alaska, you have to pay them any overtime that they earn. You can't have it both ways. Jerry, anything you want to add?
Yeah, I can't address individual state law, but my interpretation or understanding of the federal law is that if you do not you do not have to, even if somebody does meet the tests for exempt status, you're not required under the Fair Labor Standards Act to treat that person as an exempt employee. You could treat employees on an hourly basis if you want. Now, I may not be understanding the question correctly, but I'm of the impression that at least under the Fair Labor Standards Act on the federal level, even if a person does qualify for exempt status, you are not legally obligated to classify the person as exempt. And I don't know why you wouldn't do that, but I don't think you legally have to, at least on the federal level.
Right. I think I interpreted it as somebody was out, and maybe that's what they meant. I interpret it as that they were asking if they could kind of have it both ways. But maybe
no, you're right there. No, you can't. You're either exempt or you're not exempt. You're right there, Sonia. Right. You can't have it both ways like that. No.
Okay.
That'd be nice if you could.
So I'm looking at question number 26. Jim is talking about tracking his staff's hours, and he's wondering about how to track on-call staff.
Timesheet. I mean, that's I would do either a paper timesheet, old school, or perhaps on their phone. There may be apps for timekeeping that way. I don't know, Marty, Jerry, do you have other ideas?
Yeah, one thought is this. Actually, the regulations, not these new ones, but the regulations address that. They make a distinction. This is under the regulations dealing with what counts as hours worked. They make a distinction between so-called waiting to be engaged. You're waiting for work. That's non-compensable versus waiting to be engaged versus engaged to wait. In other words, you are hired specifically to wait. So in this situation, if you're hired to operate a call center, it's really up to the organization. If the organization says you are to be available from midnight to 6 a.m., you are to be available. If any calls come in between midnight and 6 a.m., you are to be available to answer them, then those are the hours worked. 12 a.m. to 6 a.m., 6 hours is hours worked, even if you don't get a single call.
Okay. So, and we're also some other questions about tracking workers when they're on call. How about do the same thing for work at home? Just to have everybody, use whatever is available, the app or pen and paper, to track the work that they're doing at home, maybe in the evening.
Yeah, I think Sonia addressed that, and she's absolutely right about how you have to do it. I mean, whether you do it on electronically or a piece of paper or something, and it does have to be fairly accurate. I don't know exactly to the minute, but certainly within 5 minutes. Sonia, I think what you said before is absolutely correct.
Thank you.
All right, and some more. You can see in the questions queue that the people are trying to brainstorm how to get around overtime. So we've there's a couple questions in there. If you all can address them. If an employee works 2 extra hours one day? Can they come in 2 hours late the next day? Can you give them comp time in lieu of overtime? What are the rules governing these type of things, guys?
No comp time. No comp time. Get that out of your head. It's only available for government, or city, state, county, federal government. Get that out. People, and depending upon the state that these people your employees are working in, that is going to determine overtime. So in California, if you have somebody that works 9 hours in that day, you must pay them for that hour over 8 hours at time and a half. You could then change the time that they come in the next day, have them come in an hour and a half later so that the pay works out. You are allowed to do that. In the rest of the country, because I think it's 47 states is 40 hours a week is when you start paying overtime. You have much more flexibility in adjusting people's time within that work week. And it's a work week, not a pay period.
Right.
Correct.
Mac, one question here that I think is fairly easy to answer. Number 28, does salary calculation include benefits such as paid health? No.
Nope. And number 29. Oops, sorry. Go ahead.
No, go right ahead.
I was going to say number 29, the enterprise and individual coverage. You need to especially a bike shop. If you're selling parts, you're receiving parts. If your folks are covered, you must proceed with the idea that your employees are covered by the FLSA, and that means minimum wage, overtime, and this whole exempt, non-exempt stuff. I mean, it's just, I think it's a losing proposition if you think you can make the case that your employees are not covered under the FLSA. Because we all do email, we order things from different states. They may be using parts in the bike shop that came from other states, and that would equal interstate commerce. So in this day and age, it's really hard to think that somebody doesn't engage in interstate commerce as it's defined by the FLSA. Marty or Jerry, do you guys have anything?
No, you're absolutely right. And also the enterprise test, I think it's shrunk to, isn't it down to now it's something like $250,000? If you have annual sales of over $250,000, you don't qualify?
500. But is
it 500? Okay.
Yeah, but I still think your individuals, your employees, if they're, like I said, especially in the example and the question, is if you've got people running a bike shop and you're, rehabbing bikes, then the parts may be coming from out of state. Any chemicals that you're using to clean up, if you're talking to people out of state.
No, you're right. Even if you use the telephone, you're right, or the internet. You're absolutely right.
Right. You just need to proceed with the idea that everybody's covered. There are no exceptions.
Right.
Okay.
And then, Mac, look at
Go ahead. No,
sorry.
I saw a couple in, sorry, Jerry. I saw a couple in here. We're talking about the nonprofits now, and we have a lot of staff that work trade shows and conferences. They go from being a volunteer this day to being, hourly worker on this day. Any advice about how we keep track of these guys and make sure that we're paying them appropriately and classing them appropriately under the new rule?
Well, that makes me very nervous.
Yes, please.
Yeah. If your employees are acting as volunteers in your organization, it must be those volunteer duties must be vastly different from what they get paid to do for your organization. And it must be voluntary. You cannot coerce or force or even encourage your non-exempt staff, your hourly staff, to volunteer their time. So be careful. It can be done. A lot of organizations, national organizations, don't want to encourage that. I think it can be done, but the example I always use is that if you are in the accounting department and you're having a fundraiser and you're somebody who's an hourly employee wants to volunteer and take money at the door, don't let them do that. Let them go shoot baskets with the kids or run something else that doesn't involve money.
The food concession.
Unless you're dealing with money.
Right.
Right.
And then what about those staff members when they're traveling? We have to log. How do we log the travel hours to and from the event?
Well, there are a whole bunch of rules on travel time. There's at least 4 different categories. Travel, that's for home to work. Commuting, that doesn't count. Travel from job site to job site, that does count as hours worked. Travel that's within a single day, you count the actually elapsed hours. And travel that's overnight, in which case you only count the hours that cut across the employee's normal workday. So there are very precise regulations on how you account for travel time, depending on the nature of the travel, the duration, whether it's in town or out of town, whether it's the same day or overnight. There are precise regulations on that.
Okay, can you all scroll to question number 75? And could somebody address that for me?
75?
Yeah.
75. Okay.
Got to scroll quickly.
What's it say?
Oh, it says, do you want to read it, or do you want me to?
So if an employee is currently exempt but earns less than the new threshold, Kim wants to know if she understood correctly the reason for reclassification of the position from exempt to non-exempt status can be based solely on the new legislation salary threshold, or must there also be position responsibility duty changes to justify the change? So the laws causing her to change somebody, what does she need to legally and morally and proper communication tell the new employee what's going on?
If it's simply about how, pay, then you just transition them to a non-exempt employee. You don't have to change the position to responsibility. That would be my advice. Somebody else may have something else to say.
Mac, it's Jerry. Okay, if I'm reading let me just read it again. The reason for reclassification from exempt to non-exempt can be based solely on the new regulation salary. Yes, the answer to that question is yes, because to qualify, keep this in mind, to qualify for exempt classification under the exemption for administrative, executive, and professional employees. That's the only one we're talking about. As I said at the beginning of my presentation, there's something on the order of 24 different exempt categories in the Fair Labor Standards Act. The only one we are talking about is the exemption from overtime for executive, administrative, or professional employees. All right, for those employees, in order to be classified as exempt, they have to satisfy 2 criteria or 2 tests. One is the salary basis test, which right now is at least $455 a week. Under these new regulations will be $913 a week. They have to satisfy the salary basis test, and they have to satisfy the duties test. If they fail to satisfy either one of those tests, and the Department of Labor has made no change to the duties test, if the individual in question fails to satisfy both of those tests, then he or she cannot be classified as an exempt executive, administrative, or professional employee. So in the scenario described in the question, let's say that I'm an executive employee because I manage 2 or more other people. Let's say I'm the meeting planner, and I exercise independent judgment and discretion, and I supervise 2 or 3 other people. From a duties test point of view, I meet the criteria. Now, let's say I'm only paid $25,000 a year. I'm not going to meet the salary level test when the new regulation, if the new regulation goes into effect on December 1st. I am not going to meet the salary basis test. So therefore, I will no longer be classified as an exempt employee. So in that context, the answer to the question is yes. If you don't meet the salary test, then you don't qualify for the exemption.
And no other responsibility or duty changes have to occur.
No, because you have to meet both those criteria.
Right. I was just finishing up the end of her question.
Okay.
Oh, sorry. Sorry.
All right, so obviously this makes everybody's head swim. This is a big change, and we've had this is a big webinar for us. We've had nearly 400 people on today. We've had over 100 questions submitted. We can't get to everybody, obviously. So before we go, and you can see on your screen next month's webcast, we're going political. We have partnered with independent sector. What is your advice? These people have lots of questions. Where do they need to check with their counsel? Where can HR go? Just some quick advice from you all as to where we can get our questions answered to make sure we're not making mistakes that might cost us down the road.
Well, Mac, speaking for I know it sounds like a self-serving statement, but I think they're going to have to consult legal counsel that that are familiar with these regulations, et cetera, and then possibly that have payroll, like ADP or these places. They may need to consult, reprogram the computers, and possibly maybe even benefits consultants. Above and beyond that, I'm not sure who, but If put it this way, if I were running an organization faced with this, I know I would be looking to somebody for help. Whether it was my lawyer, my CPA, I know I'd be looking to somebody for help. I couldn't do it on my own.
Now, Sonia, people who work with 501c agencies trust are welcome to give you a call, right?
Absolutely, absolutely.
Okay.
We can answer some basic questions, and we have a subscriber program as well that's very affordable on a monthly basis. So please,
Marty, any last moments of advice here?
Well, I agree that you're finding counsel who has expertise is important, but I also hope that organizations take this as a moment to look at their core values and what their business strategy is related to how they compensate and treat their employees. That we don't just see this as a moment of how do we comply, but how does this reflect what we really believe about the people who are doing valuable service?
Multifaceted. Absolutely.
Exactly. Well, guys, thank you so much. It was fun, and have a great remainder of your week. Thank you very much.
Thank you, Mac. You too. Take care. Bye.
Well,
thank you, guys. I appreciate it.